the best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, MicroStrategy's executive chairman has managed to accumulate over 580,000 Bitcoin, worth about $60 billion. Now, his firm's soaring stock price, it's up over tenfold since it bought Bitcoin back in 2020, has spurred a myriad of copycats. Now, a growing army of companies from pharmaceuticals to small-cap tech firms are abandoning traditional treasury strategies, diving headfirst into Bitcoin in a desperate bid to revive their flagging stock prices and reinvent their identities. But this bold rush raises urgent and unsettling questions. Are these companies genuinely embracing Bitcoin's promise, or are they chasing a speculative mirage? Can a strategy so deeply tethered to a volatile asset withstand the storms ahead, or will it unravel corporate stability? And as regulators tighten scrutiny and accounting rules evolve, what does the future hold for this high-stakes game of corporate crypto? Well, to find out more, joining me now is Carney Mak, who's the Chief Strategy Officer at Tokenize Xchange. Carney, welcome to the show.
Thank you. Thank you for the invitation, Hongbin.
Thank you so much for joining us. All right, Carney, MicroStrategy's approach has inspired a diverse range of companies from pharma to tech and even small caps like KULR Technology to allocate significant portions of their treasury to Bitcoin. What about MicroStrategy's approach works that other firms wanted to follow suit?
Okay, MicroStrategy's approach to Bitcoin has become a blueprint for companies seeking to hedge inflation, boost shareholder value, and align with a digital future. Since 2020, the company has boldly positioned Bitcoin as their primary treasury reserve assets, replacing the traditional cash holding. So CEO Michael Saylor, he's a charismatic guy. He communicated a long-term thesis that Bitcoin will be a far superior stock value of assets in today's era. MicroStrategy didn't stop at the initial allocation. They went on to raise more capital through debt and equity, using the process to accumulate more and more Bitcoin. The company disclosed were precise and frequent, signaling discipline and seriousness in their strategy.
Okay.
So why MicroStrategy's approach works? It was because first, there was a clear conviction, and Michael Saylor was always on stage on news advocating his strong execution and, more importantly, on his reasoning behind it. By positioning Bitcoin as a primary treasury asset and constantly increasing its holding, MicroStrategy offered a simple but powerful narrative that investors could rally behind this digital goal. The stock price rallied from $120 to more than $1,000, validating this model, showing that a strategic Bitcoin reserve could unlock a significant shareholder value. And this story replicated and inspired others to follow suit, hoping to capture the same momentum, similar upside, boost visibility, and more importantly, tapping into the growth community of crypto-focused investors.
Okay, so many of these companies have seen impressive share price gains after adopting Bitcoin as a treasury asset. But is this price boost sustainable, or is it more of a speculative effect?
Let me answer yours on it. Okay, so to me, it's about the correlation with Bitcoin. These companies' share price have become increasingly correlated with Bitcoin performance. When Bitcoin rises, the market rewards this firm with outstanding gains. But on the flip side, when Bitcoin comes off, these stocks tend to underperform the broader market. A good example would be MicroStrategy. In 2021, MicroStrategy peaked around 1,300 when Bitcoin was all-time high. It later fell to below 200 when Bitcoin corrected in 2022. And fast forward today, Bitcoin rallied to all-time high. MicroStrategy surged again, mirroring the Bitcoin recovery. This reflects a high beta effect, whereby shareholders are not just buying the underlying business, they're also buying a leverage bet on Bitcoin. This short-term price pop often reflects a speculative flow. Investors are rushing towards this Bitcoin proxy ahead of the Bitcoin price movement. But in the long run, sustainability depends on whether the market or the company has a solid underlying business, whether they ensure that their Bitcoin strategy program is with discipline, and more importantly, the communication has to be clear. Then the other thing is about the underlying risk, whereby there is a potential NAV compression. So when your stock price is trading at a premium compared to the Bitcoin average driven, it will create some disconnect. And when things come off, like markets come off or Bitcoin come off, they will re-rate the stock based on their net asset value.
Okay, so does that mean the price of Bitcoin plays plays a huge role in all of this?
Definitely. I think it's about holding the assets, right? So once you hold the assets, they tag the beta to Bitcoin to it. And more importantly, they were saying, why would I buy MicroStrategy on Bitcoin? That gives second thought to the market. Is it the ease of market buying, or more importantly, the leverage towards what MicroStrategy offers compared to just buying one underlying Bitcoin?
Well, aside from Bitcoin, people are following up with holding Ethereum or Solana inventory. What's the reason for this? What are the benefits of expanding beyond Bitcoin to ETH and Solana?
Okay, beyond Bitcoin, companies are definitely adding towards Ethereum and Solana into their treasury, not only for strategic exposure to the Web3 infrastructure, but also for speculative upside. Ethereum powers up the ecosystem of decentralized application and offers staking yield, whereas Solana is a favorite for its speed, low fees, and growing market community. Okay, this has already shifted a lot long-term conviction, and market has driven momentum. So everyone's thinking, what's after Bitcoin, right? So can I be the first ever Ethereum-backed publicly listed company or the first ever Solana-backed? Notably, SharpLink Gaming, one of the first ever public companies that built an Ethereum-backed treasury, and Solana Strategies have set to become the first that issue tokenized public shares on Solana. Okay, so these moves have highlighted how holding Ethereum or Solana can position firms at the intersection of innovation and also the new generation capital markets.
Well, meanwhile, some companies have issued convertible bonds or raised capital specifically to fund Bitcoin purchases. But what are the risks and rewards of financing crypto acquisitions this way?
To me, it's a lot of companies are actually using this momentum to issue convertible bonds, raise capital to fund their Bitcoin purchase. This strategy is driven by market sentiment and speculative appeal. With the success of MicroStrategy and Meta Planets, with stock price soar after an aggressive Bitcoin accumulation, now many companies view a crypto treasury as as a catalyst to boost shareholder returns and valuation, rather than a long-term strategic shift. The playbook is very simple. Mirror a bold crypto narrative to attract retail interest, generate media buzz, and ride on the Bitcoin momentum. However, the risk is real, especially with debt financing. Fixed debt obligation remains regardless whether Bitcoin goes up or goes down. Okay, ultimately, while upside can be appealing, the surge in such strategies reflect more sentiment chasing than real substance in these cases.
Okay, well, some companies also use Bitcoin strategically to fend off short sellers by attracting crypto-friendly investors. How effective is this strategy, Carney?
I think yes and no. It really depends on sentiment, like what I said again. So some companies use Bitcoin to attract these crypto-friendly investors and get more interest. This will also feed off short sellers. Because I just give an example, is if you're a pharmaceutical company or a hotel company, aside from expanding, creating more catalysts in your stock, what else can you do? And right now, everyone's riding on the Bitcoin. How about having some exposure to it? Okay. However, this Bitcoin volatility can actually destabilize financials. So to balance this risk, companies should consider ring-fencing their crypto exposure, maintaining traditional assets like T-bills, corporate bonds, or even clearly committing the risk management strategies of holding such digital assets. The key is about treating Bitcoin as a strategic reserve, but not as an entire thesis, to ensure that it compels along with your growth story rather than overwhelm the whole core business of the company.
But while Bitcoin offers upside like this, it also introduces volatility that can destabilize a company's finances. So how should companies balance the risks of, crypto volatility against the potential rewards?
I think they have to, first and foremost, create the right risk matrix to it. And secondly, is to be very transparent with shareholders and investors, because there's going to be long volatility. And, right now we are just riding on the wave that, Bitcoin is rallying to all-time high. But when there's a compression to the price or correction, everything will be hit badly. And if you raise a bond or note at 6 or 8%, you have to deliver that. And if Bitcoin doesn't give you that enough return to cover up your returns, and furthermore, I don't know when they are selling their Bitcoin, how do you recognize the gain and pay back to the shareholders? So all these things have to be managed correctly from a risk perspective.
But not all firms following MicroStrategy's lead have reaped the same rewards here. So why do you think some of the so-called copycats have struggled to replicate its, success?
Okay, I give you a very good example that happened last week. Okay, SharpLink Gaming is a clear example. After announcing their $400 $425 million raise to build an Ethereum treasury. The stock saw, but late last week, okay, they plunged 70% due to market panic over SEC filing. Okay, the sell-off wasn't tied to Ethereum prices at all. There was little, actually no correlation to Ethereum price, exposing the sentiments but not substance that was driving the move. The company entered the market during a speculative frenzy when crypto hype was all-time high, the investor behavior was unpredictable. But now it faced a lot of technical challenges like a tight share float or pipe overhang or even regulatory filings that spooked investors, leading to sharp correction in the stock price. Unlike MicroStrategy, which was the first mover advantage, they had a clear long-term vision and profitable core business to fall back on. SharpLink lacked the strong financials or the fundamentals, and the story wasn't backed up by really good discipline. Most of the price action were driven by hype, not adoption, making the stock highly vulnerable to sudden change in sentiments. The takeaway is, simply copying Bitcoin treasury strategy isn't enough. Without a solid business model and careful planning, approach will backfire.
All right. Well, Carney, one of the so-called MicroStrategy copycats and have seen success is MetaPlanet. How did this former budget hotel operator manage to raise billions and climb to the highest echelons of the Bitcoin industry?
Yeah, insane, man. So MetaPlanet, a former budget hotel operator, became the first company in Japan to adopt a Bitcoin strategy. Like I say, first mover advantage. So what they did was they sell their hotel holding aggressively, acquiring Bitcoin, and they raised $5.3 billion through stock warrants with plans to accumulate more than 1% of the global Bitcoin supply. The share price surged more than 3,000%, driven by bold acquisition, strong branding, and more importantly, being the first mover advantage in the Japan stock market, successfully replicating MicroStrategy playbook with local momentum and investor appeal. So MetaPlanet succeed where other copycats fail to struggle, cementing themselves to be the top Bitcoin proxy in Asia and one of the largest holders in the world.
Well, according to 10x research, MetaPlanet's stock price implies a Bitcoin value of around $596,154, more than 5 times the current market price. Is its froth sustainable?
Okay, shout out to Marcus from 10x Research. He has great calls and analysis this year. Okay, so MetaPlanet stock has been trading on a very highly speculative premium, implying a Bitcoin price of more than 500,000. That is insane and it's not likely to be sustainable in the long run. While more companies follow the lead, pivoting to this Bitcoin treasury model, this strategy will likely remain niche due to the volatility and complexity involved. For firms attempting to replicate MicroStrategy's playbook, execution, and financial, they have to have underlying business behind the scenes. Just a good example, if a major correction happens to Bitcoin, companies heavily exposed to Bitcoin, especially those without a strong core business, will face sharp equity declines, liquidity pressure, and more importantly, investor confidence corrosion. Firms that finance their Bitcoin purchase with high debt might struggle to service obligation, while those heavily rely on speculative momentum will see valuations corrode. Okay, eventually, this hype will all fade. Investors will focus on raw data, balance sheet strength, and how these firms recognize profit, especially if they are not selling their Bitcoin holdings. Without the realized gain, many will face tough questions about sustainability and value creation in the long run.
So, do you see more companies switching their business models, like MetaPlanet becoming a Bitcoin treasury company, or will this remain a niche strategy?
I think right now the momentum is still there. Though there will be a lot more players coming in with public listed companies acquiring Bitcoin strategy, and a lot of firms are actually helping out with this, especially the market makers. So, in the long run, I think that once the narrative dies off, everything will consolidate. It could be a deep, when that happens, and more importantly, let's see how the whole market plays out in general, because if Bitcoin continues to rally, I think that this momentum will go on and progress, and the listed co will like this playbook all along.
Well, speaking of the playbook, for firms looking to replicate MicroStrategy's playbook, what should they take note of? I mean, what should they prioritize and be aware of?
I think what they should is, when they have a core business, they reflect the cash flow of the core business and what they want to speculate on, or like what to invest on, because every listed co will have an investment arm. They either they invest in T-bills, corporate bonds and stuff. So with Bitcoin, they have to take note of the treasury management, that's first, and also the volatility, whether they can sustain the volatility and it will not hit their core business. Okay, that is the key of all games, because once everything goes down, you strip away all your Bitcoin, what do you see? Are you just a hotel chain? Are you just a pharma plant? Are they making money? And more importantly, is the core business impacted because, your whole tranche of Bitcoin is losing money.
Right. Well, speaking of losing money here, given the volatility of Bitcoin prices, how will these companies react if the next major Bitcoin price downturn occurs?
Definitely a lot of correction will come place. I think some definitely like MicroStrategy will be prepared for it, but the rest will consolidate.
All right. Well, thank you so much, Carney, for joining me today.
Thank you so much for the
Thank
invite.
you. That was Carney Mak, Chief Strategy Officer at Tokenize Xchange. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.